I'll invite our speakers up, and we'll start the question panel here in just a second. If you do have questions, make sure you fill them out on the card, and we'll collect them, ask some questions. I got some questions to start off with tonight. But I do want to clarify just kind of what actually happened with that basketball tournament. Has anybody selected basketball teams with a group of economists before? I'll tell you what happens. ESPN comes out with rankings, 1 through 64 teams. Economists never pick upsets. So for me, who picked Ohio State over Iowa State, I got no benefit for that because they all picked the right or the highest ranked team. So until we get incentives, I think I'm going to continue to falter. So a couple of questions. Again, if you have questions, let us know. We'll be glad to. But all three of you kind of mentioned, actually, Dr. Westhoff, you didn't, but it applies to yours as well. The relation as we look forward in the era of big data. We talked about crop insurance, we talked about conservation, and then commodity programs in the area of big data and how that's going to influence our policy as we move forward. And my question, I guess, is if you could expand a little bit on that and explain how the role of producers in our mind, the way we produce our crop and the way we go about management in this era of big data is going to have to change. If we want to continue to be viable, at least in terms of government programs and farm income and stuff like that. So I don't know who wants to take it first. Dr. Coble mentioned it in his first slide, but.
Sure. I think it's going to change a lot of things. The fact that we have CLU data on a lot of farmland now is going to allow some ability to administer programs at a more refined level. It's certainly going to allow us to rate crop insurance more accurately. As I mentioned, I think we'll put the crop data layer, soil index layer underneath the rating system. As Jonathan spoke, one of the things that I thought about is that I think you're going to see initiatives in certain instances where consumer-driven concern about conservation is going to lead to conservation activities to respond to the market, not necessarily due to a regulation. We're seeing some things in the South that are really interesting as producers try to validate their sustainability, and I think big data is going to be the way that is done. I'm still trying to wrap my head around blockchain technology. All I can get my head around is it's like the VIN number on your car. But you're going to be able to follow a bale of cotton or a bushel of corn all the way from the farm and verify that it was grown in a particular fashion.
Anybody have any other?
No, I would agree. I mean, data is going to potentially help a lot. It's going to add a lot of pressures. I think the consumer side of this is absolutely a big deal with that. I also think there's a real potential, and some of the things that we're working on now, of using it, and we've seen it in trying to develop tools for farmers and decision making. There's a real potential for the use of data coming out of research and being able to better translate some of the research out to farmers and put it in a usable format. So I think there's a lot of potential, a lot of good upside, but it's going to be another management challenge and issue that we work through. And again, there's, the more information people have, that can help and it can hurt. So I think there's going to be a lot of work that have to be done around that. But I think it makes for some exciting stuff ahead of us.
Excellent. So we had a couple of questions from the audience. Do you see AIPs and Farm Service Agency going to war in the next Farm Bill or anytime soon to service producers' crop insurance needs? It's a great question.
If they do, I think I know who will win. It will be the AIPs. The crop insurance industry has become quite savvy. The fact that there were some very serious efforts to restrict payments and subsidies and so forth, and that none of those got added as amendments on the floor. I think there was significant lobbying by the crop insurance industry, and I don't I don't foresee that fight really happening anytime soon. I think there'll be other fights, but I don't think that's one.
All right, cool. They're awfully quiet. What trends, if any, are evident in the percentage of highly erodible lands that have fallen out of compliance? It specifically says for J-Coppice.
Somebody planted that one. That's
Yeah.
a very good question. I'll just have to be honest, I don't know what percentage trends have come out of compliance. That is something we'll have to dig into, and I don't know if either one of you have information on that.
I don't.
I don't think there's a real high non-compliance percentage out there. I mean, it's not the kind of thing where we see a lot of real issues on, particularly on highly erodible. Where we saw the biggest issue on compliance, particularly in 14, was wetlands in some of the northern plains, where we've seen a climatic shift in a lot of formerly dry acres or thought were dry were wet, and that ran into some issues. But I don't think we've seen a lot of problems with compliance on highly erodible.
So I think Jonathan's right about that. I think it's also important to recognize that the degree to which compliance is enforced around the country is maybe not exactly the same in every county. And so compliance means different things in practice on the field around the country.
So sticking with the same kind of topic, the next question is, what consideration is given to increased extreme participation events and the compliance standards with highly erodible land? We've seen an increase. Aaron Wilson, our state climatologist, is here talking, an increase in these large rain events that, we're seeing changes in participation in total, but we're also seeing larger rain events at the same time. And what consideration is that being taken into compliance with working lands?
So right now, I don't think you're seeing that change much in the terms of compliance, but it's certainly, if we're looking forward, right, that's going to complicate that policy. It's going to complicate the way we look at it next Farm Bill or down the road. If we actually say this not just for soil loss issues and erosion, but this nutrient loss challenge grows significantly if we are, if you think about, in particular, nitrogen leaving the field from tile, subsurface tile. Well, that is largely, most of that happens in the late winter, early spring as we thaw out, and that nitrogen leaches down through the soil and into the tile and out. If we start to see shorter, warmer winters and we start to see heavier rain events in the spring, we're going to see our nutrient loss problem expand around that or grow around it because we're going to be flushing more nitrogen out of those tiles with the increase in rain. So I don't know how to answer that directly on soil, on highly erodible land issues, although, again, we've seen time and time again policy and political pressure if soil erosion increases on a large scale. So right now, I don't see another policy, but I think if you begin to see those weather events really push us into another erosion challenge, then be ready for the policy to adapt to that pretty relatively quickly in the policy space.
Excellent. Dr. Westhoff, this one's one for you. For the dairy margin coverage program, can we speculate why they continue to stay with the historical baselines for the years for the dairy margin coverage program?
Sure. So one of the concerns for the DMC program is what might this do to production?
Mm-hmm.
So the concern is if you provided as much coverage as is available on every single pound that you currently produce, it might be an incentive for people to expand production even further than they were going to. Anyway, as it is with only the first 5 million pounds, that's a lot for a small-scale producer. But most production in the country is now on farms that are larger than that. So that's why at least most people contend that the overall effect of this program on production may not be that great. But yes, I know the base issue has been one that's been very important for people.
So a connection with crop insurance, conservation and the commodity title, the question that came in is, can we increase conservation emphasis without hurting farm/crop income from the producer side? Is it possible?
Yeah, I think these policies can be adapted to do a better job around that, right? So a simple example, right now our conservation policies don't take into account price risk issues the way we do in these programs. Is it possible to redesign or rethink some of these to begin doing a better job of saying, yeah, a farmer in a high price year or high price series of years may not need the same level of conservation assistance that they would need in a low price year. So just to give one, sort of self-serving example. I worked with Illinois Farm Bureau on an idea that created a change to the marketing loan program. So instead of just the loan rate as it is now, you could borrow on a loan rate that dealt with conservation issues. And so it would be a higher loan rate, and you only paid back again if prices were below it. So you got some conservation assistance as well as the ability to offset that if prices were lower. So I think it's entirely possible, certainly from writing and designing a program side, it's really the political question. Is there a push to do so? Is there demand for policies that do a better job across both the farmer risk question, particularly price risk, and the conservation challenges that we see?
Excellent. Moving back to crop insurance, and Dr. Coble, you talked about this during your presentation, the political challenges with the crop insurance and the need for it, but then also these disaster aid payments that we're starting to see more frequently. Could you expand on that a little bit and explain how the frequency of disaster aid payments, along with the the fundamental basis for crop insurance, could work together in the future for a viable program?
Well, so last year with the hurricane damage in Florida and the Southeast, this year with the flooding situations that we're looking at in the Plain States and other locations, I think we're going to see some questions come up where there's concern that ad hoc disaster is going to compensate people when perhaps the intended incentive was for them to buy crop insurance. In other instances, you're going to have, I know with the Florida growers, insurance on specialty crops has always been challenging. There's a variety of reasons why that is. So the argument was made is that the crop insurance participation in that region wasn't sufficient. When we look at the situation with flooding in Nebraska in recent weeks, you could ask yourself, what about the grain that ended up on the ground that's going to spoil and rot? That's not covered by crop insurance. What do you do there? Livestock, our products for livestock insurance are largely price programs. They don't really protect against a major death loss due to a winter storm and things like that. So that's to the extent that you can have two separate conversations. I think that the challenge is with ad hoc, you're always trying to buy political votes to get it across the finish line. And in the process, you're probably going to add some payments that are kind of marginal in terms of whether they're redundant or whether they're of the magnitude that you make them because you simply did not know what the value was there. I'm not a big fan of ad hoc disaster in general. I'm very sympathetic to the situation where crop insurance wasn't doing the job. But I think this is probably a conversation we're going to keep having for a while. And the market facilitation payments with China are essentially ad hoc payments as well. So we've really gone from not doing any kind of ad hoc payment for a long time to really significant levels in the last 2 years. Whether this is an aberration or whether this is the future, I don't know. These two guys might have a better sense about that.
So I was on Capitol Hill in 1994, I should say, when the crop insurance bill was put in place. And I remember all the discussions we had at the time where we're going to make it impossible for us to ever have another ad hoc disaster program. Create all these legislative and bureaucratic, it just couldn't happen. Well, it happened just a few years later. In 2000, we revised crop insurance to make sure it would never happen again. It happened again. Same thing on direct payment. When the direct payment program was put in place initially in 1996, we were done making payments to farmers based on prices. We were done making payments based on production. Well, that's not how it's played out in reality. There is a lot of incentive for policymakers to want to do things for which they get credit. Keeping what's currently in place doesn't get you credit for making a change. So it's a tough thing to do to say you're never going to do something again when maybe a circumstance comes up that hadn't been anticipated. And so, the incentives are there to do something.
I think one of the things I would add is in 2008, we created a standing disaster program. So for livestock losses, if you lose livestock to weather, you can get indemnities from FSA for that. And you saw that as a push in response, again, to not only crop insurance, but then to try to get something in Title I to say we need to have something that replaces ad hoc assistance. I think what we also should consider, to continue the theme or the argument that I've been making, is that as these are more and more weather challenges, do we see a push, a political push back the other way to say, what are we doing to build resilience from some, now, wiping out a grain bin from flood is a lot harder, but some of these we may see that kind of political pressure as well to look at, is it a standing program, is there some sort of combined assistance that helps us avoid coming back time and again in an ad hoc scenario, but also recognizing just the unpredictable nature that some of these, that all of these disasters present.
So let's talk a little bit about payment limitations, and I want to frame this in kind of the form of the consolidation. They're passing the mic already. They don't want to answer. And so, I haven't had a chance to look at the census data that came out today, but my assumption is that we're going to continue to see consolidation within the ag industry. I think when I look tomorrow, I assume that'll be there. And there's a lot of connection, a lot of people that would place the blame on lack of payment limitations within farm programs within the Farm Bill. And so we had that debate this time as well in the Farm Bill from some supporters of farm programs and from major ag producing states. And so when we think about payment limitations moving forward, where do you see those fitting in? Do we continue to see support across different sectors that maybe are with even in the coalition that agriculture depends on?
That's not fair. The payment limit issue is one of the more entertainingly contentious issues in a Farm Bill debate. It really complicates for something that frankly impacts very few farmers most of the time. It really complicates the politics, particularly the regional politics. Sorry, not to pick on Mississippi. The regional politics around the farm programs, but it also is one of these issues where the politics, the perception outside of farming, is driving a lot of this pressure as well. So, look, the trend of consolidation has been, this has predated even the New Deal programs, but certainly since World War II, we've seen this trend of fewer farmers and more consolidation. The larger the farm, the payments are production-based, and they're going to see larger payments, and so that political challenge is not going to change. Payment limits are not going to go away. In fact, as we've seen, they're going to migrate even further into crop insurance questions with a whole lot of uncertainty about what that does to an insurance program. But I remember painfully some of the AGI debates and payment subsidy, premium subsidy debates. You're dealing with an issue that you can only argue so much about. Right? There's only so much. We don't know what it's going to do. But people see the numbers. We have fewer than 2 million farmers in this country, and they're receiving $15 to $20 billion a year. Frankly, the more we see certain members of Congress pick fights on SNAP, the more you're going to see payment limits be an issue. What the House did in this Farm Bill debate, I think, not to pick on the House, I just think it's going to reverberate for a while in the politics because we went after SNAP in one way and tried to open up payment limits the other. And that kind of situation is going to be a challenge going forward. So I think there's more to it than just what does it do. It's really how the perception of this looks. And as we see tough times drive consolidation, it's only going to, I think, magnify that challenge.
I guess I will add one small point here. If you look at what's happened, there's actually been votes on the floors about payment limitation related issues. If it's perceived to be a free vote, where people can vote what they want to vote, a payment limitation almost always wins. A tighter payment limitation almost always wins. But it's only if there's a coalition that is trying to hold together that we'll try to fight them back.
Yeah, that's a great point.
That is, and I would add, I think every farm bill you will see a push for payment limits. I can't see that not happening, and there'll be various forms of it. I think it's interesting while we mostly talk about crops. In dairy, in fact, we have a completely different system for small farmers. It's not a payment limit system, but it is that is a program that is really favoring small producers, but Pat's expression of concern that it may not actually make a difference has to do, I think, and this is true across dairy and our crop industries, is what's driving consolidation is the economies of scale in agriculture. And I'm not sure that payment limits are really going to stop. It will be a political maneuver, but does it really stop the technological change that's driving consolidation in agriculture? I'm somewhat skeptical.
Excellent. So we're getting pretty close to 9 o'clock for our deadline, and so please join me in thanking our speakers for coming to Ohio and being part of us. We thank each and every one of you for being with us tonight. And just one simple reminder, we have lots of food left over. They've asked that you stop by and pick something up before the evening news tonight and to have for dinner. So thank you again. Also, you'll get a survey in the next couple of days. We ask that you please fill out that survey as we have some students that are going to do some research with it. And so we thank you very much for your attention tonight, and thank you, and we'll see you again in a couple of years. Thank you.